China's export slump unexpectedly deepened last month as the country tries to stabilise an economic recovery. It comes as China's authorities try to rescue a third property developer from plunging into default. Let's get more details on first the trade data, then the property sector with Bloomberg's Charlie Zhu, who's in Shanghai for us. Charlie, good morning from London. So what does the October trade data tell us about the state of China's economy? Because actually the import numbers could be taken kind of positively.
Yeah, it's a mixed picture. So import for last month unexpectedly rose. It was the first increase in 8 months, and it bucked the consensus expectation for a drop. So it was surprisingly good data for people watching China. But exports fell more sharply than expected, underlining the global weakness in global demand for Chinese goods. The reality is, China's economy is not doing well, and the government is trying, very hard to, drive further recovery amid, slumping demand for houses, and also, consumer demand is still, remains pretty weak after 3 years of COVID lockdown. IMF just recently trimmed its GDP growth forecast for China for both this year and next year, and the government, as I mentioned, has rolled out a kind of serious measures to stimulate the growth, including recently, a widening of budget deficit, and also, issuing more sovereign bond to boost infrastructure spending.
Charlie, good afternoon. Also, away from the data, one of the largest Chinese property developers got some official support. Does this kind of signal a change in the government's stance towards the entire property sector, or is that a bit too optimistic?
I think it's hard to reach such a conclusion. Vanke is different, from other sectors, from other developers like Evergrande and Country Garden, which are both privately controlled. Vanke got a big shareholder, which is Shenzhen Metro. It's a state-owned company. And what's happened was this week, a couple of days ago, the local state-owned asset manager in Shenzhen said they have enough cash and tool to support the developer, and the major shareholder of the company said, it has no plan to trim its stake. So, reflecting investors' confidence in also optimism over the state backing, shares and bonds of the company, rose sharply. But again, Shenzhen China Vanke is state controlled, while Evergrande and Country Garden, they are controlled by private entrepreneurs, and they are both of these private companies are facing a lot of uncertainties ahead, maybe a debt restructuring, massive debt restructuring, or liquidation. The dollar bonds of those companies and other private controlled developers are trading at a few cents on the dollar, reflecting a lack of investors' confidence in the future of the entire sector. What's clear is the Chinese government does not want to use property, does not want to rely too heavily on property for growth. The long-term strategy is to boost the manufacturing sector, especially high-end manufacturing and technology especially.